Hey, good morning, everyone. Happy Friday. Today is July 19th, and it's about 7 a.m. here on the East Coast. Prices of BTC currently at $10,360 or so. Yesterday to my community, I had mentioned that this 10-6 area is going to have a lot of confluence from a lot of different resistance points from different indicators, different moving averages, different pivots, etc. And once you have it, you could see that price actually got rejected overnight, and we fell down almost to a low of about 10.25, and it looks like we're trying to bounce back up right now. Okay, the ideal spot for price to bounce actually is probably this area right here. Okay, so that's between 19,900 and about 10,000 or so. Okay, why? Because this area right here was previous support right there, right? Resistance and resistance right there. So I wouldn't be surprised that when this big sort of candle broke right on through with everything that it had, price needs to come back to retest the same area as support and then keep on moving up. Okay, if it is indeed going to keep on moving up. All right, now yesterday in my video I had stated that this 5-wave count right here, any which way the 5 waves go, right, in terms of Elliott waves, there's always 3 waves in the opposite direction. This is called a 5-3 count in the Elliott terminology. Okay, so what that means is when you have 1, 2, 3 right there, 4 right there, and then 5th one ending right there, right after that 5th one is the start of a new wave count, and that could be this right here, A, B, and C right there. Okay, it's really hard to tell exactly where this ABC structure is going to lead off to, but typically what happens is, the big resistance level is typically the 618 Fibonacci level of this entire move from this top, which is 13,200 or so, and to this bottom right here, which is around 9,000. Right? So that, if we take that Fibonacci, we map it out, 618 comes out to about $11,700 or $11,600. Okay, so I wouldn't be surprised if prices move up to this level. But before I go further, let me explain to you why we're struggling in this area in 10,600 and why this could really be the top of this C wave, and we could actually potentially go down a bit further. And unless we stop again at 9,000 and try to bounce back up again, maybe creating a double bottom, this could be a very rough time and a rocky road for the weeks ahead for BTC. Okay, and why I was so cautious to let my community members know yesterday, I told them in Bitcoin analysis, I told them in my short positions and everything, I had to give them warning signs that, hey guys, I'm going to try to get out of my position at break even at about 10,500 and place a stop right there. Okay, why? Because as I had been averaging down this entire move right here, my average just so happened to come down to about 10,500 or so. And in that same time frame, if we look on the 15-minute chart or so, I saw that right around this area right here, okay, this was basically going to be about, well, actually, I think we were up here somewhere. Somewhere around here was a 10,500 marker, and I didn't really want to break past it. And if we did, I figured that means that we're invalidating the structure and we're going to go a bit lower. So I wanted to avoid, once I got stopped out of 10,500, this is what I wanted to avoid. Exactly what's happening right now. And potentially maybe even a deeper retracement. All right, so knowing exactly where to place your stops strategically, understanding where to take profit, understanding, the structure of the market is everything that we teach in the Cryptosomniac community right here with our technical analysis course. You could click on this course right here, and actually I'm knocking off $5, so it's only $14.99 right now. So come join with us. All right. And if you do get that course, I'll give you 7 days in the Cryptosomniac Advantage community, which is all these locked channels that you see right here. And even right here, we opened up 2 more channels just to be able to trade if you are basically a bear in this market and you love shorting. Okay. We have our resident bear in our Cryptosomniac community, Jordan, and he loves shorting, and he's made a ton of great opportunities for the community to make money in the recent decline in the market. All right. So with that being said, the reason why we're getting stopped at 10,600, let me show you. Okay. Here's the 4-hour chart on Bitcoin. Okay. Let me see if I can make this actually 6 hours so it looks a bit smaller. Okay. Well, this line disappears. Okay. Let me make this 6, or actually we can even make it 12. All right, so the 6-hour comes from middle of April, okay, all the way over here. There's a touch right there, and then we break on through. Okay, so basically this was a ascending trend line that the price would love to go up, come back, retest it, and then go up again. Okay, once it finally broke on through, look what's happening. All right, we are hitting that same trend line, this trend line. I'm going to make this a different color so you can see we're hitting that same white trend line right now, right at that point for rejection. Now here's something else. Here's another different trend line. Okay, now you have probably never seen trend lines drawn like this, but these are valid. Why are they valid? Because they touch multiple structures at different support and resistance levels, and they're validating them. Okay, so for example, this is a touch right there, another touch right there, price moves on through it, comes to test it again, and breaks on through it again, makes it resistance again, and then a resistance again, right? So this is why this black line is also valid. Okay, the intersection of these 2 black and white trend lines is where exactly price met, all right, just yesterday. Okay, this is no coincidence, folks. This is really how technicals work. And for those of you who question technicals, when things like this happen, this is not just some random voodoo magic just putting up lines together. This is exactly how technicals work, whether it's bots and algos working together, professionals driving price a certain way at a certain time. So the point is, don't be surprised by price meeting at this convergence point and getting rejected to maybe even a further drop down. Okay, now let's turn on something else that's interesting. Okay, so I'm going to turn all this off, and I'm going to turn on the pivots, the 30 moving average, the 200 moving average, the 9-day moving average, the 50, the 100. I'm trying to look for the 21. There it is, the 21. Okay, so you have the 100, 250. Okay, I think that's all the moving averages that we need to see. All right, perfect. Okay, so here is price coming to converge. Let me zoom in on this a little bit more. All right, I hope this is clear when you're watching this video. Look at this pivot right here, okay? Right around 10,600 and some change, okay? Notice how price hit that pivot exactly and is now getting rejected. Rather, it's not getting rejected, but it's being stopped in its steps, okay? Rejection implies that price is going to basically, break on farther down, okay? So we have to kind of be a little bit more careful with our terminology, right? So with that being said, price is actually getting stopped right at that pivot, okay? Notice also that the red marker, which is the 9-day moving average, okay, the black line right here, which is the 21 EMA, the white, which is the 30 EMA, and the blue, which is the 50 moving average. Okay, all of these 3 moving averages plus the pivot point all meet price at the 10,600 level. Now, okay, here's where I want to sort of clarify a point, which is that these moving averages all converging right here, they don't each hold some magical power to hold the price down. What it's telling you is that the average momentum of price that had been respected for so long, right? Whether it was bots or traders, algos, whatever, okay? Or even just average retailer thinking of, hey, if price is, moving around at a nice uptrend, then that means that, it's respecting some moving averages and it's trending up, right? If these moving averages are trending down, that means that the price itself is trending down. That means that basically, whether it's the retailers or bots or algos, they've all basically, put up warning signs right at the same time, because these moving averages converging here is basically giving you an idea that the previous, 21 days or the 30 days or the 9 days right here, they're all saying that current price is lower than those average prices of the last 9 days or the 21 days as per the exponential, or the 30 days as per the exponential, which is not a good sign. So unless price gets past it and breaks through it, until then, this is really just a wait and see kind of moment, okay? And in this wait and see kind of moment, you would be wise to be on the cautious side that as long as we are under these moving averages, as long as we are under this pivot, you might want to be a bit careful, buying into this area right now, okay? So the point is that all these points are resisting price at the 10,600 marker, okay? The next bounce spot, again, could be potentially the 50 moving average, which is about 10,000, or something that I mentioned the other day, okay? In our entire last year's run, where is the, actually, let me see if this pulls up here. I'm going to turn off this pivot, and I want to show you guys. I mentioned this yesterday, how the 100 moving average was a well-respected moving average all through the rally and run in 2017. You could see it bounced off right there, came very close to it, and then broke on through. Actually, if you even go back further, let me see if I can pull up a different chart, and I wanted to show you guys this because it's so important. You can see right here, it's a little bit more visible on this chart, right? Bitstamp has a lot more data. So even over here, March 2017, bounce off the 100 moving average. January 2017, bounce off the 100 moving average. Even over here, we tried to bounce off the moving average, did not, got rejected by the 100 moving average, and then finally broke on through. Okay, so if the moving average, the 100 moving average is not support, and prices do break on through, sometimes it does become resistance. And it becomes resistance for a long time, like it did over here in August 2016, all the way into October 2016. And then it finally breaks on through. All right, so the point is that the 100 moving average has been historically a marker that price likes to gravitate towards, especially when it's stressful times for the price. So currently the 100 moving averages comes up around $8,200. Over the coming days, if it keeps moving like this, it may come up to $8,700 or $8,800, okay, if it came up to it in the next week or so. All right, so definitely just something to keep in mind, folks. All right. Now, another thing that we need to sort of see is, okay, so let's look at this move right here that happened yesterday, okay? Now, we were nicely moving in this descending parallel channel, right? And then out of nowhere, what happens is we have this bottom created, we move up, get rejected, retrace a little bit, and then just a bazooka candle comes out of nowhere, okay? Now, I would have been okay with, this moving like this, and then finally breaking on through slowly. But the fact that, something like this happens, sometimes it's really an inorganic move, all right? And what I mean by inorganic is there's no reason, okay, there was no warning sign given in these 3 candle sets right here to tell you that something like this was going to happen. Now, markets as a whole will never really give you the sign that something is definitely going to happen, but for the most part, it's really hard for me to gauge a world where, you know, something like this happens just randomly without, you know, something, I wouldn't really call it manipulated, but it's partially manipulated, because really what happened was price hit this bottom, rounded off, right, retraced just a little bit, and then why at this point did it, you know, stop out some buyers and then shoot on up? You know, and also, where did these orders come from to rip through this massive resistance level, right? So this is what I mean by sort of inorganic, right? Because it wasn't like a slow grind that we've seen for the last couple of months of BTC slowly going like this, right? It was really like, you know, okay, find support, hit resistance, come back, and then randomly let's just, you know, take off. So that's what I mean. And so what I'm trying to imply is that this whole move, right, is to me a bit suspect, okay? And that's why it makes me a little bit more cautious to hold back and say, all right, if this is really a valid move and the bulls really stepped up, okay, let's see some follow through, right? Let me see what you got, okay? So the fact that, you know, we're retracing back just a little bit tells me that, all right, some of this move was definitely inorganic. Some people could have driven up this market all the way up here. And what I've seen over and over again in different markets too is you drive up the price, all right, open up stops in this region right here, okay? And then basically the people who fueled up this market right here, they start slowly selling off their position into retailers, because the retailers are now bullish, right? They don't understand that, hey, this is really just a big con, okay? So the retailers are buying while these guys are selling, and then ultimately, because retailers can never really support or push up price, these people are just selling and selling and selling, and then slowly hits back support or maybe even breaks on through. And while this is selling off, right, they are making gains on their short positions. And that's it. This was really the con and the ruse that really just happened. I'm not saying that's exactly what happened, but it's definitely a possibility, especially with some, you know, random garbage like this. All right, so this is why I'm a bit cautious on this move, and this is another reason why I decided to sort of set my stop on my remaining position at 10,500, is because I really didn't fully believe in this move. And also what I just showed you earlier with, you know, all the convergence of all those different moving averages, I just figured, you know what, we're already approaching so much resistance. It's best if I just let go with, you know, no profit and no loss, right? Sometimes it just pays to be in a no position move, right? Sometimes the best position, as they say, is no position, okay? So with that being said, you know, look for the retracement of this area right here, maybe even a sharp wick that touches, you know, maybe 10,050 all the way to about 9,000 or so, or I'm sorry, 9,900. And hey, listen, if I'm wrong, that means what would happen is, you know, this goes up, comes back, retraces, bounces off here, and then rips on through. But for now, what I'm really doing is I'm just waiting. Okay, I'm sitting on my hands. I'm telling the bulls, all right, show me what you got. Let me see if you can climb up above all these moving averages that I just showed you earlier, right? I showed you the EMA 30, 21, what else? Moving average 9, and this pivot right here. Let me show, you know, or let me have the bulls show us what they're made of and get past this big sort of 10,600, you know, frontier that's really just, you know, holding price back, okay? Till then, I'm just going to wait, and if anything, I might actually place a long position, a small one, at the markers that I just showed you right here, around 10,050 and 9,900. Why? Because the probabilities are high that it could potentially bounce off there, even if it's temporary, right? And let's see. If we just put it up like this, you could see the 50 and the 618 from this move right here. Okay, line up right between this marker right here. Even if we stretch this out back down here, you can see the 50 also bounces off in this region. Okay, so not only do I have a retracement of two different markers of 50 and the 618 fibs lining up to this area, but I also have the previous support, resistance, and resistance right around that same area. So I wouldn't mind opening a potential long position in this area. If it breaks past this and I see an hourly candle closing, I'm going to consider shorting. Okay, so my game plan, folks. And I hope you sort of don't take this for granted that I tell you everything that I'm going to do, because I really don't. These morning videos that I provide that are 30-40 minutes long are very short part of our day for the amount of content and information that we provide to our Advantage members. Okay, like for example, imagine if what I told you happens. Okay, you don't know the stops, you don't know where to take profits, you don't even know if the structure changes in the middle of the day what to do. This is why it's important to join the Advantage membership. All right, and then you can converse with us and you know exactly what's going on. We talk to you almost 10, 14, 16 hours a day, talk to our Advantage members, and we let them know exactly what's going on, what the community is doing. You can see all this conversation, people from all over the world, all different parts of life, discussing what to do. Our other analyst, Jordan, always chiming in, explaining, what he's up to, what he wants to do. So that's basically the thing, folks, is if you really want that constant contact and be able to converse with someone, to understand things, or have a massive education section right here like we do, or even a basic technicals course like we do, Cryptosomniac community is the community for you. All right, let's check the RSI here. On this big move right here, we didn't even see overbought levels on the 4-hour, but I think we are just moving sideways into slightly neutral to bullish territory on the 4-hour. I mean, it looks like we are pulling back just a little bit, but that was really interesting on the 4-hour chart, right? Again, what also happened was we had this trend line right here. Okay, so maybe prices bounce off this trend line for the RSI and then keep on moving up. All right, which would also coincide with price itself coming down to this level that I spoke about earlier. All right, let's see how the daily is looking. Let me hide all this stuff. Here's the daily chart. Okay, now another thing on the daily to recognize is this bounce move right here could be very similar to this one right here. All right, so we had a hammer, follow up bullish, this was an indecision, follow up bullish, and then 2 days of selling, right? Basically retraces the entire movement of this candle right here, but doesn't go to the low of this big hammer right here, right? So you could see the potential retracement of this, maybe this entire movement, and then keep on moving up for several days ahead. So that could be a possibility too, because one thing that I really like to see in markets is that I like to see the 618 level be tapped, on the way up or on the way down. So if we look at the 618 from this 13,200 all the way down to 9,000, don't be surprised if somehow prices go on like this, come back, test this level as support, and then move up here and then come back down. Okay, so the 11,600 marker. But really, the break of 12,000 and I would say 13,000, this is where things get interesting, and this is where I would definitely be more liberal in terms of going long and not caring as much about potential more downtrend. Okay, but for now I'm a bit more cautious because I don't really see any strength in the market just yet. I'm hoping that the market shows me otherwise maybe in the coming days, but for now there's really nothing for me to sort of trade off of. I do want to buy more spot buy positions as prices do float down. Okay, that's something that I'm not concerned with, but that's just because I'm just long on Bitcoin for the longer term, right? I don't mind picking up cheap Bitcoin while I can get it, especially because I've made so much profit selling up here, selling, in this region right here, collecting all through this, and I just broke even yesterday at 10.5. So if I get cheaper Bitcoin down here, heck yeah, I'm going to collect some, right? So that's kind of the way I'm playing the market right now, okay? Now, another thing that I wanted to show y'all is this weekly chart right here, okay? This is also where things get a little bit interesting, all right? So here's the weekly chart right here, okay? Now, one thing I don't like about this weekly, all right, we had a big sort of shooting star, gravestone doji, whatever you want to call this candle. After this, we had a nice follow-up, right? It looked like things were getting better. And then the following week, we actually dug in even higher into this wick. For the most part, I knew that, this was right around 12.5, 12.7 was the 618 retracement of the reverse retracement of this high to this low. So I figured at some point we're going to get stopped here. And we did, and I actually sold off right around, 12.5 or so. And then we saw a big down move, right, all the way to about 10,200. And now we're seeing a follow-up weekly candle, okay, which, again, looks like an indecision right now. Nothing bearish about it, nothing bullish about it, just an indecision pause, okay? So if this pause happens right here, all right, you may want to see what the next, bullish candle or the next candle, if it's bullish or bearish, all right? If it is bullish or bearish, we'll have to figure out, exactly where to buy in. I would feel much safer buying in, at least over 11.6, 11.7 because of the retracement that I just told you about earlier. Or if you want to truly be safe, you want to wait above 13,000. All right, and I'm giving you guys these options because some people have a higher risk tolerance or some people have a lower risk tolerance than others. Okay, so you understand that you don't just have to buy now or buy later. There's always different points for you to be able to buy. All right. Now, another thing that I found interesting was if you look at this weekly chart, okay, remember that I was very, excited for us to sort of cross this level, but we also had stated that the reverse retracement from this high to this low was about 13,500 right there. I don't know if you guys can see that. Okay, let me make the 618 Fibonacci level blue. Okay, here's that 618 Fibonacci right there. Okay, few weeks ago, I think it was June 24th or 26th, I stated to my community that this is really the area that I'll be selling off in. Why? Because this is the 618 retracement of the entire move from this top to this bottom. Okay, strategically, this is really where you want to get out. Okay, whether price goes higher or lower, this might be the point that you want to at least consider and target. Right? And that's exactly what I did. I was fortunate enough with our Cryptosomniac community to get out right at that spot. We rebought in, down here, sold off at 12.5 again. So we made a couple of, trades where it yielded us nice profit. But then after, really what happened was when you start looking at the structure of the market, it becomes a little bit more uncertain, okay? Uncertain because we had this wick break past and take out a lot of orders on this up move right here, okay, above 11,600, right? This was really the marker, which is this big white box, right? 11,500, 11,600, which is where February 2018 candles closed, the weekly candles, right? And then after that, we just got a sell off and we never really looked back to this area again. And once we entered the area, it was very important and imperative for us to close above this 11.5, 11.6 area on the weekly. Okay, so notice how the 11.6, 11.7 marker that I mentioned to you on the 618 retracement from this high to this low is important, right? Because not only does it converge with this area, but it converges, with this movement from this high to this low. So that's another area that you could wait for, which is 11.6, 11.7. Closing above 11.6, 11.7 on the weekly is also a very positive sign in my opinion. All right, closing below $9,600, which is this previous weekly that we actually happened to close above, is a fairly bearish sign. All right, why is it bearish? Because the next big support is really just this previous $8,200 marker on the weekly that we happen to break out of. Okay, or it could really be the block between this area right here, all right, and this. Okay, this would really be your next support between $7,500 and all the way to about $8,700 if this weekly candle right here closes below this 9,600 marker. All right, so you will have to be a bit vigilant coming Sunday, which is about 2 days from now essentially, right, to see if prices close below this, because if they do, that means that more than likely they're headed into this block right here. This is basically the order block before prices jumped up really high, meaning that more than likely there's a lot of people sitting in this level waiting to double down or defend their positions. All right, so with that being said, now you have all kinds of markers to look out for. All right, but like I said, the wisest thing that you may want to consider doing is at least waiting, pausing, looking at the market and letting it give you signs versus you reacting in a premature way and giving up money to the market. All right, I hope that makes sense. Okay, so I am sort of still looking at something like this where this big flag is playing out, but this price needs to at least come back to this level to respect this like massive pennant looking thing that's happening. The fact that it's not, I don't know how I feel about that, because this does not really look like a very positive sign just yet, although I'm still not overly concerned of the overall trend of Bitcoin, but I do remain cautious. Okay, and being cautious in a market like this, where the time frames are slowly turning, from bullish to neutral, maybe even slightly bearish, it might behoove you to at least wait, pause, and try to understand what's happening in this market. All right, folks, giving you different markers. Our side look forward to. Let's check out the volume analysis too. Let me hide all this stuff right here. Yesterday I had a couple members asking me, what are the things that I really look forward to? What indicators do I use? What kind of magical tools do I have? And I was explaining to them that for the most part, I love just looking at the raw price action right here, just like I'm showing you right now. Okay, and volume analysis is big for me. I love drawing channels like this, and I like drawing Elliott wave counts, and I like drawing horizontal support and resistance levels. All right, all of these, when you start clicking on these indicators, guys, there's going to be 100 of them. I mean, at least hundreds. Okay, and they all may have their own strategy. Some things that work for some people, some things that don't. Some things that work for one market or one asset, and some things that don't. Okay, you have to figure out what works for you. Okay, I'm not saying that this is the end all be all, but I'll tell you one thing. Every single one of these indicators that you see, these hundreds and hundreds of indicators that people have made over time, okay, they are all derived from price. And I'll tell you another thing. They are all lagging from price, meaning that price will move first, okay? Price will move first, and then the indicator will react. Okay, these are called lagging indicators. Why? Because they derive everything what's happened in price, not what is going to happen in price. So it might be wise for you to understand different candlestick patterns at first. Okay, so for example, yesterday I explained to one of the members that these three candles right here are called an advanced block bearish. Okay, these three candles, 1, 2, and 3. Why? Because the candle size itself is decreasing in size and the volume itself is just dropping off, this is telling me that price is approaching a resistance. And so it's called the advanced block, bearish, because it's 3 different candles in a row that are getting smaller and smaller in strength. So basically the strength is getting weaker and weaker, all right, as we sort of hit this area right here, which again makes sense because I was already looking at the horizontal of 10,600. So you can see how the pairing of me knowing this is called the advanced 3 block bearish, right, as well as the sideways horizontal of the 10,600 marker around here, as well as understanding that the volume is dropping off and knowing that what the hell was this move. All these things give me a better contextual picture of exactly what to look for, certain levels to look for, when to get in, when to get out. Okay, when things start looking shady, I don't want to be touching a market that's not even giving me signs of life. Okay, so the point is that none of these indicators are going to give you sort of a crystal ball of buy and sell. All right, they may get lucky once in a while. Some might actually be good where they give you some good signals of once prices moved, when to get in and when to get out on long or short positions. But that's not the point, right? If you understand the overall picture of what this market is showing you, you don't need these indicators. They're definitely going to help if you really want to make it easier on yourself. But I'm saying that, all of that is already derived from price. So why not understand what's happening underneath the indicators, which is price action, volume analysis, momentum, and then do it yourself, right? Build your own indicators, become your own indicator. Okay. All right, folks, I know I'm ranting and raving a lot. I apologize, but I'm just very passionate about this stuff, and I love trading. I love explaining to people exactly who I am, what I'm about, how I trade, and everything that we do is visible in our Cryptosomniac community. And people sort of love our community because we provide the education, we provide the information, and we don't just blindly tell you buy this, sell this, sell here, buy here. That's not what we're about. And if you're looking for that, we're definitely not the community for you. You may want to go somewhere else. We are the kind of community, if you want to understand how we trade, how do we line up fibs, how do we draw trend lines, how do we trade on different markets like Deribit and BitMax, what are futures, what are options, what's backwardation, what's contango in futures, what's, how do you draw, different channels, how do you draw different horizontals. Okay, if you want to learn all these things, come join our Advantage program right here, or the technical analysis course, only $15 like I showed you earlier, and you will see the benefits of our community like all these people have, right here. All right, you can see all these reviews and you can read them yourself if you do come join. Okay, so that's it, folks. I'm gonna quit bragging about our channel and end this stream for the day. Look for the 10,600 marker or look out below. All right, that's it. Take care and have a wonderful Friday. Cheers.